I know people in the real estate business. My mom is one of them. We don't argue about this anymore because I'm not going to convince her. She talks about the crash of 1981. The crash was her real estate company. Real estate companies crashed in 1981 because nobody was buying any houses. But here's what happened with home values. This is home values over 50 years. So you've got wartime, peacetime, Democrats, Republicans, high rates, low rates, good economy, bad economy, booms, recessions on this chart. And all you ever see when the economy goes soft is a flattening of home values. Except for this one time where we had a bubble, true, and then we had a correction. But isn't it interesting how this 50-year chart kind of chugged along, and as soon as it deviated, it fought its way back and corrected, and now it appears to be a little bit too high for my taste, and look what's already starting to happen. Knock down, level. If the economy turned negative, if jobs got bad, okay, if unemployment went up, if inflation went up, if the overall economy went bad, I could see this being flat for a while. But the only reason why it came down was because back about 10, 12 years ago, the banks lost their heads, the government lost their heads, and they were giving money away to people. This is the way it looked on the ground that caused this. Everyday people that could afford $200,000 had a blank check in their pocket for $300,000, and they went bidding. And they drove the prices up artificially because the bank gave them a qualification for more than they really could qualify for, right? The market does not like being messed with. It wants to do this. And so when it did that, and then went back to doing that again. All right, so first order of business is to just internalize the idea that, number one, the reason why this is because population growth equals housing demand equals upward pressure on prices, period, right? So you could have, like, I have people who will argue with me about how, well, you know, the price of tea in China, we've got tariff problems, we've got all these things that are surface issues that are all real, but they don't change the fact that if population is growing, period, that's it. Housing is going to have upward pressure. All right, so that's why we tend to fend off negativity. We've been able to demonstrate, not just us, the industry has been able to demonstrate that occupied rental properties are a thing. There are 16 or 17 million, depending on whose data you look at, 17 million existing rental properties in America. Just to put some context around that, that's 12% of the population. And so there are more people, ready? More people living in single family rental homes than drive SUVs. So it is a big market segment, much bigger than most people thought. Right now, only 2% of all the single family rentals are owned by big Wall Street firms. But 55% of all the apartment buildings in America are owned by big Wall Street firms. The reason for multifamily consolidation is there was a big commercial real estate distressed situation that went on back in the late 80s into the early 90s. That distressed real estate situation caused a lot of capital to come in to buy up all this distressed real estate. Wall Street bought a lot of real estate, liked what it saw, continued to acquire, and then you blink your eyes, 2 decades go by, and now more than half of all the apartment buildings are owned by big pension funds, insurance companies, and other institutional sources of capital. We see all the indicators that the same kind of thing is happening now. Housing crisis was distressed real estate. Wall Street came in to buy up distressed property, liked what it found, learned how to operate at a very, very high margin, and now all the major companies that own thousands and thousands of single-family homes are freshly capitalized, that have billions with a B, more capital into the space now. They're all doubling and redoubling their holdings, and I don't see it changing. And what that means to small investors is that when you build a portfolio of 5, there's somebody who's got 25 trying to make their way to 50 because they want to sell to somebody who's got 200 trying to make their way to 1,000 because they want to sell it to one of those whales. So picture a food chain where there's guppy, small fish, medium-sized fish, big fish, whale. Now we've got whales on the end of our food chain. There's a current that you can swim in. So ultimately they compete with you for deals at times, but in the end, they're a buyer for what you build. If you own multifamily and you decide that you want to free up some of your capital, you got to sell the whole building, all or none. So if I put $1 million into a multifamily building versus $1 million into single family, I could decide I need to send my kid to college. I may have a big tax bill I have to pay. I may see some other opportunity I want to take advantage of. I can peel off 1 or 2 units out of my single family portfolio, take that capital and do what I want with it. I can't do it with the multifamily. The other thing is that there's something really pure about single family in that I consider it to be the base unit of investment through which you take a position in the town. So if you wanted to buy Huntsville, Alabama, buying a house and buying multifamily anchors you there. But with multifamily, if there's some time in the future where you think it's the right time to sell, you decide you do want to sell it, you got to find somebody who thinks it's the right time to buy. And it might be that for reasons related to not just pure population growth, but something else might be going on where it might be harder to find a buyer of the multifamily. Where single family, the buyers of 80% of the houses in America, 8 out of 10 purchases every year are home buyers. And they're not buying because of the economic situation. They're buying because they got married, right? They're buying because they had a kid. It's a lifestyle decision. And so
definitely there's more chances of selling, and there's more market. There's always a market for single family because starter home, first time home buyer, all that stuff.
Right. And so the value of the property, if you do want to sell it, or just if you're counting the money, or if you want to refinance it, is attached to something that is, it's like an emotional purchase, which isn't usually a good thing. But when I say that, I mean it's a personal decision. People are deciding to buy, and so that's it. It's the idea that there's always a fork in the road in the future. Whenever you want there to be, do I sell this property to, or is the value of this property being supported by investor interest? In the case of single family, it's usually supported by home buyer interest. And when the economy goes well, it's more supported by home buyer interest. And if the economy goes badly, it winds up being more supported by investor interest. So it's kind of a two-headed coin that you always wind up being in a good spot. So everybody that I know who is raising a family and working hard, they all want financial independence, and they give their money to a stockbroker. And it's one of two things. It's either investors in the stock market can't figure out if it's going to be a bull market or a bear market. Either they don't know what they're doing or they do. I'm not sure which one is scarier. If they do know what they're doing, they enjoy a headline like that. They enjoy when the president tweets something they can pretend scares them. They enjoy watching you sell your stock in a moment of panic so they can buy it cheaper. You're not really financially independent, I don't think, when you're at the mercy of people who would manipulate the market, or who so don't understand the market that they can be bullish on Monday and then scared on Tuesday. Real estate doesn't do that. Houses in America perform in an incredibly stable, predictable way. Even 10 years ago, when the market went up too fast, it came down just as fast and then leveled off right where it wanted to be in the first place. You can learn all of this. Well, here's the thing about millennials. They're people, like everybody else. They're going to live longer. They're taking longer to settle down. When I was in my 20s, my housing decisions were based upon how close I could walk home from the bars. And then I had kids, and my housing decisions became, where are the best schools? Same person 3 years later, all right? So millennials maybe wait until they're 32, 33 years old to be thinking that way. Eventually fall in love, have a family, settle down and everything else, and then different things become important. So I never bought into the idea they don't want to own homes. I think you're just asking people too early about buying homes. There were two reasons why they would give you, when the stories were abound about how they don't want to become homeowners. One was, I don't believe in the housing market because they lived through the housing crisis. The other was, I want to live the mobile lifestyle. I don't want to be tied down. I think that's the bigger reason. I think millennials are going to be right on board just maybe 6 or 8 years after everybody else. We're in competition with home ownership. Those of us who own and manage rentals are competing with home ownership. What I mean by that is those tenants are wired to want to be homeowners. Most everybody is wired to want to be a homeowner. If we can have them put that decision off for a couple of years because they really enjoy being a tenant, they enjoy the home, so the product is good for them, the neighborhood is good for them, that's the product. They enjoy the experience, like real customer service, like we're investing millions of dollars right now in technology to enable us to give that kind of white glove service where the customer calls, the smiley, happy person knows who they are, has the conversation, sends somebody out. It's Phil. If we really think in terms of what can we do to make this experience better than home ownership, forget about being better than some other landlord. I want to be better than home ownership, which is actually pretty easy. Home ownership is a pain in the neck.